Hi all, it's time for another news roundup. Let's kick off the week with some of the biggest headlines in the mortgage and buy-to-let market. First, mortgage rates are creeping back up. After months of slow but steady drops, MoneyFact says the average 2- and 5-year fixed rates both nudged up by 0.02%. Doesn't sound like much, but it's the first month-on-month rise since February. Lenders are playing it safe, heading into winter. After all, no one wants surprises before the budget. Instead of a big rate hike, we're probably looking at a plateau. Still, it's not great news for anyone hoping for cheaper borrowing before Christmas. Now, borrowers shouldn't panic, but make sure to get good advice before locking anything in. Basically, don't let budget rumors spook you into grabbing a deal you'll regret. Now, here's some news that might make renters wince. Or start browsing Rightmove. According to new research from Lloyds, in 9 out of 11 UK cities, it's now actually cheaper to own a home than to rent one. The average first-time buyer would pay around £1,135 a month on a mortgage compared to £1,360 in rent, saving roughly £225 every month. In Glasgow, that figure is as high as £400 a month. Of course, the big hurdle remains that deposit, but Lloyd says low deposit mortgages could help renters make the leap sooner. And once you're in, you're building equity instead of just paying your landlord's mortgage. On to buy-to-let news now, and eviction delays are hitting landlords hard. According to the High Court Enforcement Officers Association, it now takes around 8 months in London to get tenants evicted through the courts, costing landlords an average of £12,700 per property. The HCEOA says transferring cases to the High Court could save landlords time and money, but too many judges are reluctant to allow it. Industry bodies, including the NRLA, are urging the government to act, saying the court backlog is broken and driving landlords out of the market. Whether or not they resolve it remains to be seen. And finally, a plot twist: Millennials are taking over buy-to-let. New data from Hamptons shows Millennials now make up half of all new buy-to-let investors, a huge shift from just 5 years ago. 3/4 of all new property company owners are under 50, with Millennials on track to launch 33,000 new buy-to-let companies this year. That's double the 2020 figure. So, while older landlords are scaling back, the next generation's stepping in, and apparently avocado toast money can stretch to a rental portfolio after all. A lot covered this week. Don't forget to subscribe to get each week's property updates quickly and easily. See you next time.